Something is happening in Las Vegas right now that almost nobody is prepared for. On the surface, everything still looks normal. The Strip is glowing, tourists are walking around, and the news keeps describing the housing situation as a simple cool down. But the people inside the industry are seeing something very different. Behind the scenes, conversations are getting tense. Agents are whispering about deals falling apart, and homeowners are quietly admitting they're scared. Developers who were confident a year ago are suddenly backing out of projects. Buyers who used to line up for units have completely disappeared. Entire condo buildings now have floors of dark, empty units that were once impossible to get. The shift has been fast, silent, and far more dramatic than anything being reported publicly. And the new numbers coming out of Las Vegas aren't just concerning, they're historic. They show a market that isn't gently correcting. It's not stabilizing. It's not cooling. It's slipping, quickly and quietly, in a way that almost feels like the start of something bigger. If this trend continues, Las Vegas could be heading straight into one of the fastest real estate declines the city has seen in more than a decade. People inside the Las Vegas real estate world are starting to panic, but they're not saying it out loud yet. On paper, everything still looks manageable, but privately, agents and building managers are sounding the alarm. They're noticing things that don't show up in the official reports. Things like scheduled showings getting canceled, owners calling to ask, how fast can I sell? And investors quietly backing away from deals they were ready to sign just a few months ago. In some buildings, maintenance staff are saying they've never seen so many empty units. Hallways that were always occupied now stay dark for days at a time. Realtors who used to brag about bidding wars are now admitting that they haven't had a serious buyer in weeks. Even the people working inside the high-rise towers are whispering about owners trying to get out before the situation gets worse. It's a strange kind of tension, not loud, not dramatic, but very real. Everyone feels something shifting, but nobody wants to be the first one to say it publicly. It's that quiet panic that spreads through an industry right before the data finally catches up. And in Las Vegas, that shift is happening faster than anyone expected. Across the city, the inventory problem has become impossible to ignore. Just 12 months ago, condos and single-family homes in Las Vegas were moving so fast that agents could barely keep listings active for more than a weekend. Today, that same market is overflowing with properties that no one seems interested in. Units that once sparked bidding wars now sit untouched for weeks, then months, gathering dust while the list of available homes keeps getting longer. The surge is staggering. Every week, hundreds of new listings appear, but barely a fraction of them leave the market. More homes are entering the system than exiting it, and it's happening with a consistency that scares even the most experienced realtors. The ratio of new listings to sales has flipped completely, and it's creating a backlog that grows bigger with every passing month. What makes this so dangerous is that exploding inventory is always the first warning sign. It's the signal that demand has dried up, that buyers have stepped back, and that sellers are holding properties that fewer and fewer people want. In Las Vegas, this imbalance isn't a slow incline, it's a vertical jump. And when inventory rises this fast, history shows the price corrections that follow are rarely gentle. The simplest way to understand what's happening in Las Vegas right now is this: buyers have disappeared. Not slowed down, not hesitating, completely disappeared. A year ago, open houses would draw cars lining the street, people waiting at the door, offers coming in before an agent could even finish the tour. Now, some agents don't bother scheduling weekend showings at all because they know no one will come. It's not that buyers are being picky, it's that they're not showing up in the first place. This shift is visible everywhere. Homes that used to sell in a single day now sit untouched for 30, 60, sometimes 90 days or more. Condos that once had people fighting to get in are now sitting empty with lights off and no footsteps in the hallways. Realtors admit privately that they haven't written a serious offer in weeks, and when buyers do appear, they walk through units slowly, calmly, with no urgency at all. The psychology of the market has flipped. 2 years ago, the fear was missing out. Buyers rushed to lock in anything they could before prices climbed higher. Today, the fear is overpaying. People believe the market will be cheaper in the future, so they wait. And when buyers wait, the entire housing system begins to freeze. Sellers get desperate, listings pile up, and every week that passes pushes the market deeper into a place where recovery becomes harder. The price cuts happening across Las Vegas right now are unlike anything the city has seen since the last major downturn. Sellers who once listed their homes with confidence are now slashing tens of thousands of dollars off their asking prices just to get a single showing. A $10,000 price cut used to be a big deal. Today, it barely gets noticed. More and more listings are dropping $20,000, $30,000, even $50,000 in a desperate attempt to attract someone, anyone, who might be willing to make an offer. What makes this even more alarming is how quietly it's happening. The official median price chart still shows stability, even small increases. But the real prices, the ones owners are actually accepting, are sliding downward fast. These aren't small negotiations or minor adjustments. They're deep cuts that show just how much leverage buyers have lost in the market. And yet, even after all these reductions, many sellers still can't get a single offer. Some listings sit empty despite multiple drops, proof that the demand isn't just weakening, it's collapsing. In older buildings and high-rise towers with rising HOA fees, the panic is even more intense. Owners are trimming their prices aggressively, trying to get out before fees rise again, or before the next special assessment lands. In private investor groups, whispers are spreading about off-market sales that are even lower units, rumored to be selling for shockingly low numbers, just because owners can't carry the costs anymore. When those kinds of silent, hidden deals start happening, it's a sign that the market is cracking long before the public data catches up. One of the biggest forces crushing the Las Vegas condo market right now isn't interest rates or tourism, it's the HOA fees. These charges have become so extreme that they're pushing owners into financial corners they can't escape from. In the major high-rise towers on and near the Strip, monthly HOA fees are no longer a few $100s. They're routinely landing between $800 and $1,600. And in the luxury towers, owners are reporting numbers north of $1,800 or even $2,000 a month. Many owners are paying close to $20,000 a year in fees before they even touch their mortgage, taxes, or repairs. And that's not the worst part. The real danger comes from the unexpected assessments, massive surprise bills that can land without warning. Across Las Vegas, owners are being hit with sudden charges for elevator repairs, roof replacements, water intrusion damage, plumbing failures, and structural issues that were ignored for years. Some assessments come in at $5,000 or $8,000, while others break $10,000 or more. A few older towers are rumored to be handing out assessments far beyond that, and the owners already struggling with regular fees are getting crushed under the pressure. Stories are spreading about people who received multiple assessments within a single year, totaling tens of thousands of dollars. One former owner said their building issued 3 assessments in just 14 months. And the combined cost was so overwhelming that selling at a steep loss became their only option. Some owners have already paid off their mortgages, but the escalating fees and assessments have made it impossible to stay. It's a financial trap that gets tighter every year, and many owners are quietly slipping into a position where they can no longer keep up. When HOA fees rise this fast and assessments hit without warning, the system becomes dangerous. And in Nevada, the law gives HOAs enormous power. A few missed payments can lead to liens, and if the debt continues, the HOA can foreclose, even if the owner is completely current on their mortgage. That means someone can lose a $300,000 or $400,000 property over a few $1,000s in unpaid fees. It's a nightmare scenario, and it's becoming more common as fees skyrocket across the city. Las Vegas has always depended on tourism to keep its economy alive, and when that foundation starts to crack, everything else feels the impact. Over the past year, the number of visitors coming into the city has dropped sharply, and the effects are now rippling through every part of the local housing market. Hotels, casinos, and entertainment venues are reporting fewer guests, meaning fewer shifts, fewer hours, and fewer paychecks. When tourism slows down in Las Vegas, the entire city slows with it. This shift is hitting workers first. Casino employees, hotel staff, restaurant workers, and service industry employees are all seeing reductions in hours or outright layoffs. Many of these workers make up the backbone of Las Vegas's middle-class homebuyers, and when they lose income, they fall behind quickly. The unemployment rate in Vegas is already climbing, sitting above the national average, and each month brings more job losses. The knock-on effect is simple. When people lose their jobs or their hours get cut, they stop being able to pay their mortgages. Notices of default are rising across the valley. Foreclosure filings are increasing at a pace that worries analysts who watched the last crash unfold. Vegas is now one of the highest-ranked cities in the country for foreclosure activity, and these early signs usually appear long before the headlines catch up. It's not just one sector that's struggling. Everything connected to tourism is being affected, and when the financial heartbeat of Las Vegas weakens, homeowners feel it immediately. The combination of job losses and rising living costs is putting pressure on families who were already stretched thin. People who bought homes during the frenzy of the pandemic boom are now finding themselves underwater, owing more than their homes are worth. With fewer visitors, fewer jobs, and fewer paychecks, the city is slipping into the same dangerous pattern that has preceded every major housing downturn in Las Vegas history. The rental market was supposed to be the safety net for investors in Las Vegas, But that safety net has completely snapped. For years, owners counted on steady rental income to cover their mortgages, their HOA fees, and their maintenance costs. But now, even the rental side of the city is showing the same warning signs as the for-sale market. Vacancy rates have climbed close to 10% across the valley, and even the buildings closest to the Strip, the ones that always rented without effort, are seeing empty units stack up. The problem is simple. Renters now have options. Thousands of new apartments have been built across Las Vegas in just the last 2 years, offering modern amenities and aggressive move-in incentives. They're offering free months of rent, waived deposits, discounted utilities deals that individual condo owners simply can't compete with. Owners who bought units expecting strong rental demand are now watching their condos sit empty for weeks or months, generating no income while expenses climb higher every month. This reality is pushing many investors into a corner. When a condo sits empty, owners not only lose rent, they still have to pay soaring HOA fees, rising utilities, insurance, and maintenance bills. For some, that means losing anywhere from $1,000 to $2,000 per month just to keep the property afloat. And when losses stack up long enough, owners do what they always do in Las Vegas during downturns. They walk away. The combination of rising vacancies, falling rents, and exploding carrying costs is creating the final pressure point in a market already cracking from every side. Buyers are gone. Sellers are desperate. HOAs are becoming unaffordable. Tourism is weakening. Jobs are slipping. And now the rental market, the last safety valve, is collapsing too. All of these forces are happening at the same time, and they're pushing the Las Vegas housing market into a place it hasn't been in years. The signs are everywhere, and they're impossible to ignore. Whether this becomes a slow correction or a sharp downturn depends on what happens next. But one thing is clear. Las Vegas is entering a phase of uncertainty that homeowners, investors, and even the city itself will feel for a long time. And for anyone watching this unfold, the smartest move right now is to stay alert, stay informed, and understand that the story of this market is only just beginning.